Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon. And today we're diving into Quanterix's latest report. And let me tell you, there's a lot going on under the hood, especially with that big acquisition they just made. Get ready for some numbers that might surprise you. Alright, so Quanterix is a life sciences company. They make these fancy machines that help detect tiny protein markers in things like blood, which is a big deal for diagnosing diseases early on. Think of it as super sensitive detective work for your health. This report covers the period up to June 30th of 2025, and it's like looking at the company's financial diary for that time. Let's jump right into the financials because that's where the real story is. First up, cash as of June 30th. They had about $132.9 million in cash and another $128.3 million in marketable securities. That's over $260 million in readily available money. Sounds good, right? But hold on, compare that to December 31st, 2024, when they had over $232 million in marketable securities. That's a big chunk of their investments that vanished in just 6 months. Now let's look at what they spent money on. Research and development costs for the first 6 months of 2025 went up to $19.1 million. That's a significant investment, showing they're still pushing hard on developing new technologies. But here's a red flag. They reported $7.7 million in impairment and restructuring costs. This means they had to write down the value of some assets, likely due to things not going as planned, and they also had to cut some jobs. That's a big hit. And the reason for that big hit, they had to write off $6.4 million in goodwill. Goodwill is basically the extra value they paid for a company over what its tangible assets were worth. So when they write it down, it means they overpaid or the acquired company isn't performing as expected. This is where things get really interesting. In July 2025, they acquired a company called Akoya Biosciences for about 7.8 million shares of their own stock and $19.6 million in cash. This is a massive move, and it explains a lot of the spending and restructuring. Looking at the cost of goods sold and services, it increased to $27.1 million in the first half of 2025. That's a 6% jump from the same period last year. Digging deeper, the cost of product revenue specifically jumped nearly 28%. This increase is partly due to the amortization, which is like spreading the cost of that new acquisition's technology over time, and also higher inventory reserves. Now for the big one, selling general and administrative expenses. These costs shot up by about $13.7 million, a 27% increase. A huge chunk of this, over $10 million, is from that Akoya acquisition. Even with all these costs, their total revenues did see a drop of about 18% from over $66 million to $54.8 million. This is mainly because some big projects they had in 2024 didn't repeat. And what's the bottom line? Quanterix reported a net loss of over $50 million for the first 6 months of 2025. That's a huge jump from an $18.5 million loss in the same period last year. Adding to the financial strain, they announced a plan to cut costs and preserve cash. They incurred $1.3 million in restructuring costs in the second quarter alone for layoffs. This all adds up to a significant outflow of cash from their operations. They used nearly $20 million in cash for operations in the first half of 2000, an improvement from last year, but still a lot of money going out the door. On the flip side, their investing activities showed cash provided by $94.6 million. This was mainly from selling off some of their investments, which is how they had to fund a lot of these recent expenses and acquisitions. Financing activities were pretty quiet with a small outflow of cash. It seems they weren't taking on a lot of new debt or issuing a massive amount of stock in this period. So where does that leave them in terms of cash after all the spending, especially on Akoya? They still have a healthy amount of cash and investments, but it's definitely less than before. They believe they have enough to last them at least a year, but the acquisition was a big push. The acquisition of Akoya is a strategic move to expand into new areas like spatial biology, which is all about understanding how cells and markers are distributed in tissues. This is a growing field and Quanterix wants to be at the forefront. They believe this will eventually lead to more cost savings and make them cash flow break even by 2026. Now, something else that caught my eye is in the controls and procedures section. It seems Quanterix has been struggling with their internal financial controls, specifically with valuing inventory and tracking revenue from their accelerator laboratory services. They've brought in new people and software to fix this, but it's an ongoing process. This really makes you wonder about the accuracy of their past reports. There aren't any major legal proceedings to report currently, which is good news. In terms of risks, they're still facing challenges like those economic conditions, research funding cuts, and the general uncertainty in the market. These external factors are a big deal for companies like Quanterix that rely on research spending from other businesses. So what's my take on all this? Quanterix is making bold moves, especially with the Akoya acquisition, aiming for growth in a competitive market. However, all this ambition comes at a significant cost, as seen in their increased losses and restructuring charges. They're essentially betting big on the future, but there's a lot of risk involved. The fact that they need to write down goodwill and are still dealing with internal control issues suggests they might be overextending themselves a bit, or at least facing some significant integration challenges. They're definitely in a turnaround phase, trying to build a stronger, more diversified business. Alright, that's our breakdown of Quanterix's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out our Discord community in the description for more insights and to connect with fellow corporate enthusiasts. Thanks for watching. See you next time.